of this information as well for their small business. I want to thank all of the financial advisors that have invited small business owners to participate. My name is Shane Westholter, CEO of Gateway Insurance and Gateway Financial Advisors. Welcome. We look forward to bringing you some great content here. Some of the guest speakers I will introduce here just momentarily that will be doing the presentation. For those of you that are joining on the presentation today, we do want to make sure that you contact your financial advisor when we are done with this presentation that invited you, or you can certainly contact us at Gateway here, and that we will connect you then with one of the financial advisors across the country. We have about 200 offices nationally, so we certainly can help service across the entire organization. There will be no sales on this presentation. We're not asking you to buy any products. We simply want to bring you some information about the loans and some of the provisions that are available through the COVID-19 Trinity of Relief, or the CARES Act, as many of you have got to know that acronym. First up, I'm going to go ahead and turn it over to Keith Gillies. Keith Gillies is going to lead us in the presentation. He is with United Wealth Advisor Group, and down in New Orleans area. Keith and I have gone back for many, many years through NAFA, one of our industry organization relationships, as well as we do business with them in a variety of different ways. In addition, we'll have Todd. Keith, I'm actually going to let you introduce them as you bring them on, right? Instead of going all back. So thank you everyone for joining on. I'm going to turn it over to Keith. Please take it away.
Thanks everybody, and thanks for joining in today. Let me first introduce you to two members of our team. And before I get to them, United Wealth Advisors Group is a firm probably not unlike Gateway Financial. We have offices in 9 cities but each office has a separate brand. So United Wealth Advisors Group exists to serve the advisor. For example, in New Orleans, we actually have 4 brands, 4 distinct brands. Wealth Solutions, which is my company. Acacia Financial Brokerage, my son Blake runs, and he does some business with Gateway out of that. Fountainhead Private Client, which is a high net worth marketing arm for us, high net worth clients and business owners. And then finally, Acacia Financial Group. So with that said, let me introduce first to you Todd Villarubia and Mark Massey. I have known both of these gentlemen for over 2 decades. They're outstanding advisors and clearly experts in their field. And they were invited today to participate to help all of you understand first the law, the CARES Act, phase 3 of this 3-phase stimulus package. And also we will give you some insights into opportunities inside the legislation as we go along. As Shane said, these are not meant to be sales techniques in any kind of way, but we want to certainly share with you the opportunities that exist today. So with that, I will begin the slide presentation. This is courtesy of NAFA, the National Association of Insurance and Financial Advisors. Many of us on the call are members of NAFA. I am just recently past NAFA National President, and certainly glad I'm not president now while all this is going on. But with that said, let's get started with this, and we'll start with first. There were 3 phases of legislation in the past month or so to provide stimulus to American citizens and businesses. I'm not going to spend a lot of time on 1 and 2, other than number 1 involved $7 billion in SBA loans. Those loans, if you're a business owner, and if you're a financial advisor and you file a Schedule C, you may be considered a business owner under this particular provision. But you went online directly to the SBA, not through a lender, filled out an application, made your case, and submitted it. So I actually did this for my own company here, Wealth Solutions, and we did it for our national company, United Wealth Advisors Group. That was about 10 days ago, and we have not heard anything yet. That's just one thing that we have to say about the SBA loans. Number 2 dealt primarily with worker assistance and dealing with the healthcare workers. And number 3 is the big one, $2.2 billion of stimulus in this particular package. And that's what we're going to focus on today. So I will skip over this. This is a chart that we can provide to your financial advisor and to the financial advisors. This chart is something good as far as talking about the phase 2, the emergency paid leave requirements that were in phase 2 of the bill. This is going to be important later because there are provisions in here that provide tax credits. And if you take those tax credits, you are not eligible for the Paycheck Protection Program that we'll get into that is in the CARES Act. What are we doing about questions? Is somebody emailing questions in as we go along, Shane?
Yes, Keith, I'm watching the chat. For
There we
those of
go.
you that would like to ask questions, you can enter those in underneath of the chat section, type those in, and we will address those throughout the presentation as they come on.
Okay, very good. Thanks, Shane. This is something that NAPA put out. For the advisors on the call, as soon as this was put out, we immediately sent this to our compliance department for all of our companies, affiliates across the country and their advisors to get compliance approved. And we sent this out. This was a great piece that had links that dealt with all kinds of information for our clients. And it's a really good piece. If you have not done something like that yet, I would advise you to do so. All right, let's talk about phase 3. As I said, $2.2 trillion. The $1,200 individual and $2,400 married tax rebate checks should be going out. I heard the Treasury Secretary this morning, they should be going out in the next week or 10 days. If you or your clients have not filed your 2019 tax returns, this will be based on your 2018 tax return. So I had a question. This was actually from one of our daughters who said her income went down from 2018 to 2019. She would have fully qualified in 2019, but not in 2018. This is a tax credit. So when you actually file those returns, you will get the remainder of the tax credit if you have not maximized the tax credit. So you will not lose it. You just have to wait until you file your return. So for example, there's a phase out here, which we'll talk about in a minute, but if you were phased out of half of it and then your income dropped in 2019, you'll get the other half when you file that return. There's expanded unemployment insurance. That's an extra $600 a week. Caveat with this, interesting, I had some clients say, well, listen, if I bring back my employees, they will earn less working for me than if they take the unemployment that they're getting today plus the $600. Conundrum with the tax law, people have to make their own decisions. The big daddy here is the PPP. We'll spend a lot of time on that. Employee retention tax credit, I talked about that a little earlier. Everybody can delay their tax payroll payments. So we'll talk a little bit about that. Big one here that Todd's going to talk about, the carryback of net operating losses. Huge opportunity for those of you in business who have net operating losses. And then Mark is going to drill down on an ever-changing environment regarding retirement savings provisions. And when I tell you Mark Massey is one of the true experts in the country on this, and if he's struggling trying to find answers, I don't know what the everyday advisor or employer is doing. And then we'll spend maybe a little bit of time talking about the employer provided tax deferments for student loans. Okay, so let's talk about this tax rebate. As I mentioned, $1,200 per individual plus $500 per child with a valid social security number. There are no earned income tax or tax liability requirements to receive these checks. So if you filed the tax return and you filed within the fall within the second bullet point. If you're single and your income is $75,000 or below, you will get $1,200. If you're married and your adjusted gross income from last year, or 2018, was $150 or below, you will get $2,400 plus $500 for every child. These payments begin to phase out between $75,000 and $100,000, and between $150,000 and $200,000. So basically, if your income as a single taxpayer was $99,000, you're not eligible for this special tax credit, or $198 for families. The unemployment, we just talked about this. It's an extra $600 per week. I believe it is 10 weeks that they will receive this. So in addition to your state unemployment, here in Louisiana runs about $250 a week. You know, these people would be earning about $850 a week. And if you think about that, you're getting over $20 an hour for being unemployed. Interestingly though, independent contractors, self-employed, independent advisors, and what they call gig workers like Uber drivers, who usually do not qualify for unemployment insurance, will get unemployment insurance under this. These are HSA, FSA, and HRA enhancements. Basically here, telehealth is covered, and over-the-counter drugs that you buy can now be reimbursed pre-tax through the HSA, FSA, and these enhancements. All right, here's the big one, the PPP. So I'm going to give you some of my own personal experience with this, and maybe many of you have gone through the same thing. I started preparing our documents Friday, getting everything together that they said the SBA said they wanted, and my bank officer said he would need. And Friday afternoon, they changed the form. So Saturday morning, I come to the office, spend about 3 hours putting all of this together in a folder, so it's all ready to go, PDF files, and then the link comes in. All that work was thrown out of the window. You had to start from scratch again with an online application process. So it's been very frustrating. My understanding, though, is that as of yesterday, $40 billion in loans by the SBA were already granted. The program has a cap of it's really $349 billion in the act, technicality, $350 billion. When that runs out, there is no more money. So Congress would have to go back in session and pass another bill expanding this program. You need to go do this now. So these are set up for small businesses with fewer than 500 employees. Let's talk about the process here as well. There's been some confusion about the loan forgiveness. The loan is based upon your average salaries that you paid last year, 2019, to your employees. So let's just say that your average monthly salary was $10,000. You can borrow up to $25,000 under this special plan. The reimbursement, the loan forgiveness grant, is based upon 8 weeks of salaries that you pay your employees, plus an additional benefit of that other 25% that will go for rent, utilities, and mortgage interest. If you take the $25,000, if you use $20,000 on salaries for your employees within 8 weeks after receipt of the loan, and you spend the other $5,000 on rent, utilities, and mortgage interest, then all of those loans, those loans will be forgiven. That $25,000 you will not have to pay back. These are non-recourse loans, which means that you are not personally guaranteeing the loan. Many small businesses, when they make a loan from the bank, they have to personally guarantee the loan. That is not the case with this. These are non-recourse loans, and they're based upon good faith that you're providing the proper information. Ladies and gentlemen, what I would advise you to do is to follow the rules carefully. What you don't want to have happen is 2 years from now, there's an audit and they find out that you didn't apply this properly. Todd, do you want to talk to that just a little bit on this? If we can unmute Todd, please.
I'm sorry, Keith, I had a little background noise. Can you ask that question again?
Yeah, I'm just saying that I advised everyone if they're making application for these SBA loans to use it as it was applied for and as it is intended, because at some point in time, there's going to be some audits and back testing on this, and you don't want, yeah.
Sure, and just to be clear with everybody that's on this call, I think there's actually a couple of different things. I mean, there's so much, in the legislation that Keith, in a format like this can't go through it all. But to be clear, there's the EIDL portion of it, which is the economic injury disaster loan that everybody, could apply for directly through the SBA. And then there's through the PPP program, which is really going to be administered by your local community banks. So what you need to do is to go to your local bank and find out whether or not they are now accepting applications, because not all of them have come online yet. That's the first step. The second step is that, at least with the bank that I'm using, there's a process, as Keith mentioned, that's all online now, and you're going to need to get a bunch of documents together, including your 940s and your 941s, which are the payroll reports for your organization. The other thing to be mindful of as well is that they will cap any salaries at what would be an effective annual salary of $100,000. So roughly about $8,000 per month. So if you as the business owner were making more than that, you can apply, but it's going to be capped at about $8,000 a month. So over that 2-month period that he mentioned, about $16,000.
Yeah, so it's $8,333.33 a month.
Yep.
So that is on the cap, and you'd have to cap all of any employee you earn above that as well. We use a payroll service. That payroll service was easy to go there, get the information, get all the 940, 941 information together. If you're self-employed, the tip here is to make sure your bookkeeping is very, very good and tight. So make sure that's very clear what you're doing. If you're a Schedule C filer, make sure your bookkeeping is really, really tightened up on this as you make the application. As Todd mentioned, and hopefully all of you have a good relationship with a banker. I've always tended to work with community banks. I wanted to support our community. We have relationships with 3 or 4 banks here. And so what we've done is, if you don't have that relationship with the bank, they're putting you to the back of the line. So just keep that in mind. And then for contractors and Schedule C, self-employed people will be able to make their applications this Friday, April 10th is when that will open for them. Let's talk a little bit about the food service industry, just because it's so important. And Shane, and for everybody on here, this is the most important part of the act thus far, is this PPP program.
Let me jump in 1 second, Pete.
Yes.
For those of you that are on the call, Todd, by the way, is managing partner with Wealth Planning Law Group with 30 years experience, both tax planning and estate planning and so forth. And Todd, you can give more background later as you choose. We do have 2 questions that go in with what we were just talking about, so I'm going to insert them now.
Okay.
Number one is one person S corps, are they covered?
Yes.
Yes.
Okay, and then can you explain briefly the 2 times payroll and how that works as we get into the PPPL?
Yeah. Well, I thought I did that, so sorry. So let's say your average payroll for 2019 was $10,000 a month. You can apply for up to $25,000 from the SBA in a small business loan. 20,000.
Keith, just to be clear, it's not 25,000. It's 2.5 times the annual. I think that may be confusing some people. There's no cap on it. It's 2.5 times the average, right?
So I was using if your average monthly salary is 10,000, then you can apply for 25,000. If your average monthly salary payroll was 100,000, you can apply for 250. And one of my clients is applying for 4 million. So to Todd's point, thank you. That might be the clarification. I was just using the 10,000 as an example.
And actually, I did that. We applied for ours. I used a U.S. Bank where we do banking, and they actually calculated it for me as I was going through the application and said, here's the maximum that you qualify for.
Yeah. Yeah. So that's also possible too.
Partnerships are also covered, correct?
Partnerships are also covered, yes. That there's a cap of that, as Todd mentioned, $100,000 annualized income. There's a cap for that always. And I had an interesting call from one of my clients this morning. He goes, well, look, I have salaries from like 3 different businesses. Can I do it 3 different times? And I said, yeah, I don't think so. He goes, well, that's what my banker told me. I thought you'd give me a different answer. But I don't think you can have, 5 different businesses and get 5 times that. I think that's not the spirit. That's some of the things that I was talking about. Be careful, stay within the guidelines and the spirit of the legislation. 501c3s are eligible for this. And the client that I talked about with the 4 million is a 501c3. And I skipped over the restaurant part about this. And I find this very interesting. If you own a restaurant right now, you're absolutely getting slammed. I mean, you're getting clobbered. So the argument here is that I go apply for this loan, I pay my employees, but they can't come to work. And certainly that probably helps them, and I get the loan forgiven, and maybe I get a little bit of rent relief. But if I go 2 more months like this, I'm going to be out of business. And I think that the purpose of this particular legislation was to put money in the pockets of employees. So they're going to probably have to do something else that's providing relief for these other small businesses. Now, interestingly enough, if you are not a 501c3, you're not eligible for this. However, you are eligible for the tax credit program. And unless you have somebody who's falling into that category and throws up a question, Shane, I don't want to necessarily go down that rabbit hole, but we can. Physicians are eligible. Physicians are eligible. So that gives you a lot of information about this. We've talked about all of this stuff that's on this slide. I think we've covered because we want to get through a lot of stuff and have time to answer questions. This is the credit, Shane, that we were talking about. So if you can take either one of these, you have to do the analysis and see which one is best for you, the tax credit program or the PPP program. But the non-501c3 organizations can apply on, I'm cutting out badly, I see, okay. Shane, can you hear me fine?
I can hear you, yes.
Okay, so it might be something on their end, on the receiving end. I'll step a little bit closer. So it says here, good option for employees not eligible for PPP. All right. delay in payment of the payroll tax. This is done to provide cash flow for your business owners and for you. You can delay the payment of your 2020 payroll taxes until 2021 and 2022. That's about, they estimate about $300 billion of extra cash flow. So that is delayed for you. There's no penalties and no interest, and you have until 12/31/2021 and 12/31/2022 to pay those in 2 equal installments. Todd, I'm going to toss this to you, my friend. This is very important for business owners.
So for a lot of business owners, they have something called a net operating loss, not for your pass-through entities, typically, in a C corporation, for example, setting. And a lot of times those losses get suspended. So in other words, they can't take them in the current year, and you have to wait for future years. What the new legislation allows is that your business owners can actually take any of these suspended NOLs and go back and amend prior year's tax returns all the way back to 2013. So it's a great opportunity for those of you that, the business owners that are on this call, if you have NOLs, or for the financial advisors that are on this call, to reach out, because this is a real benefit that you can get to your business owners out there to allow them to take this and to go amend the returns, which then allows them to literally get paid by the IRS, for those NOLs and to soak up those losses right away to your financial benefit. So it is one way that the business owner community can benefit under this legislation.
Todd, can I interrupt you for a second?
Yes, sir.
There was a question that came in that I think would fit here, and you can answer. For the calculation of average salary, can they include the cost of health insurance and retirement plan contributions by the employer?
Yes, it does for both.
Yeah, but not payroll taxes.
And then one other quick question while we're at it, can an owner get the EIDL grant and for the 10K and also the PPP loan at the same time?
Yes, you should apply for both of them. And our understanding is that $10,000 EIDL, is going to be an advance that will be forgiven even if there are no further loans, is my understanding.
That's my understanding as well, Shane. And when you file for your PPP loan, you're going to have to list an addendum if you did apply for the SBA loans for other entities with those tax ID numbers.
Okay, and since we've got Todd, and I know we've got CPA on the line as well, but one of the participants said their first application was calculated by their CPA to include payroll taxes. They had to do the application without the payroll taxes. Was that correct?
Yes, that is correct. That's what I just said. The payroll includes salary, sick leave, vacations if they took that, okay? 401k matches both Roth and traditional, and any health insurance benefits paid by the employer, but not Social Security, Medicare, or unemployment.
So since you brought up the Roth, Keith, I'm going to let you address this. I think it might fit right here. If they take the advance on the 2020 credit, could that affect the conversion, Roth conversion in 2020? They also did a conversion.
I'm trying to.
It could put them over the threshold, basically, if they take that credit.
So,
I think what they're trying to say, Keith, there, maybe I might be able to help.
Yeah, go ahead.
I think what they're talking about maybe is the credit rather than the PPP, the payroll tax credit. Is that what you think they're asking, Shane?
You're muted, Shane. He's saying correct.
Okay. So if they take that credit, then you can't take both. You either have to take the credit against the payroll taxes or the PPP. So there is no offset for it. You have to choose one or the other.
Yeah, but in regards to a Roth, if you're making a Roth contribution on your own, the $6,000 or whatever it is, that is still based upon your salary. Roth conversions have unlimited salary. The salary is irrelevant on a conversion. So I'm not sure how the Roth fit into the PPP, Shane. But maybe somebody can clarify that question.
Will do.
Shane,
Clarify it and get back. Yep.
Okay. All right. Now I'm going to flip it over to Mark Massey. I've known Mark for probably 25 years. Like I said, I think he's the best in the business when it comes to retirement plans. Mark is vice president of SMA Services based out of Birmingham, Alabama, even though he actually lives in the New Orleans area. Mark is here today to hopefully clear up some confusion, but first talk about the act and what it meant, and then some confusion out there in the space today. So, Mr. Massey, where are you, my brother?
Good, thank you. First of all, before I get into the act, and you can take the slide down if you want. Everybody's had a chance to read it. I really don't follow it anyway. I want to spend a minute and talk about safe harbor plans. And the reason why is because I run a TPA with hundreds of companies. And the most common question we're getting, and I'm saying to the tune of 5 to 6 times a day, is, can I cease my safe harbor match? And this has nothing to do with this act, but it's very important to know, because I'm going to make a wild stab that a lot of people in this room either have sold 401ks or participants in a case, etc. So if you have a safe harbor match and you get the call like I'm getting, and it says, what can I do to stop this match? So I want to give you a tip. Most people think that the only way to stop it is to, give the 30-day notification, which is required. So if I send it out today on May 8th, the safe harbor match is going to stop. You have to fund it through that date, and you're subject to testing. Okay, that is an option. But here's a better option that fits most people. If you amend your adoption agreement to allow for your safe harbor match to be made on an annual basis, as opposed to the per payroll basis that most people do, that allows you to defer your safe harbor match until, and I'm going to assume this is a calendar year plan because almost all of them are, then that allows you to defer that match till 12/31 of 2021. Okay, now you have to amend the plan to make it an annual match. But then when I explain that to people, most people think, well, by then I'm out of the woods, everything's back to normal. I will be able to afford the match sometime between now and that date to fund 2020. And then, everybody continues to get the match during the course of the year. I don't have to have the discrimination test, because the minute you pull that match, people are going to drop like flies out of the plan. Okay, and that's going to cause all kinds of discrimination testing issues, all kinds of refunds, etc. So I just want to get that point in before I get into the Coronas thing, because the Coronas thing is basically just 3 sections as it retains to qualified retirement plans. And it's about distributions, loans, and required minimum distributions. I'll take them one at a time. But the first thing you have to understand is, what is the definition for an eligible participant in order to utilize any of the 3 things that I'm getting ready to cover. So I'm going to read them to you. Well, read one of them. 2 of them are simple. One of them is if you have COVID-19 or SARS. Okay, that's obvious. The second one is if you have a spouse or dependent that has the disease. And the third one is the one that's a little tricky, so I'm going to read it. It says, experience, quote, adverse financial consequences, unquote, as a result of a quarantine, furlough, layoff, reduction in work hours, business closure, lack of child care, or other factors determined by the IRS due to the coronavirus emergency. So that's kind of a catch-all. And then under that, it says the plan administrator, whoever the administrator on your 401k is, may rely on a participant's certification. So like on hardship, where you used to have to prove, let's say I'm being evicted from my home, you bring in the eviction notice, then they cut you a check for the hardship. This is a verbal, take my word for it, I'm in trouble type arrangement. Okay? So once we've determined if you're eligible, let me take a step backwards. So the other section, the next two sections relate to distributions and loans, but they don't happen automatically. So each employer has to make a decision because it's not in their plans today. So they have to make a decision. Number one, do I want to participate and amend my plan to handle the loans and distributions? And you could say, well, I'm going to do the loans and not the distributions, not the loans, or I'm going to do both. But nothing happens until the amendment is made. So let's just assume for the purpose of the rest of this conversation, you did both. So let's talk about distributions first. Essentially, in a nutshell, what they've done is they've taken the hardship distribution, extended it to the definitions I've laid out for Coronis, and then raised the 50,000 minimum up to 100,000. So you can take up to $100,000 of vested accounts. Now, the key to all this and the confusion that Keith's talking about is, you know, the senators and congressmen in their infinite wisdom use the word in service on all this. Okay, in service. In service typically means, and to me still means, and we're trying to get further clarification, that you're still on the payroll. And I think what their intent was is to get employers to furlough people instead of let them go, or if they let them go, have some type of severance package to where they could continue to still be in service, which means getting paid on the payroll. So let's just say for the simplicity that I take $30,000 out of my 401k. I'm not loaning, I'm distributing, taking a distribution. First thing, me as a TPA is not going to withhold the 20% in taxes that we normally do. So if you ask for 30 G's, you're getting 30 G's. However, as we all know, Uncle Sam always gets paid. Okay, so even though I'm not withholding it, you still have to pay the tax on it. Now they've extended the time that you can pay the tax for up to 3 years. So let me play that out. Let's say that I took the 30,000, I only spent 20,000 of it. So I've got 10,000 left and Coronis passes through and we're in December of this year. I could take the remaining 10,000, roll it back into the plan, roll it into an IRA and just pay tax on the 20 and could spread that over 3 years. So if you don't use it, you can roll it back in without having a taxable event. It's important. The 10% penalty, which normally would be in effect for people who are under 59 and a half years old, has been waived as for people who meet the definition. Okay, so now loans.
Mark,
So yes.
Before you move on,
Yeah.
on RM, since you're talking about that, on RMDs, does that apply to the beneficiary RMDs as well, the suspension?
Yeah, RMDs is the third section. I'm going to cover that. It does, and I'll give you the 3 events that make that happen. But in a nutshell, really RMDs, nobody's paying them this year, but I'll be specific on that when I get to that section. Or you may just cover RMDs now?
No, that's fine.
Okay.
Go ahead. Mark.
Back to loans. So, you know, I needed that 30,000, okay, because I got bills. So in lieu of taking a distribution, assuming A, my company has a loan program, which about 70% of employers do, and B, they amended the loan program to extend the Corona situations, I can take a loan. Now, the loans have always been, prior to this, you can borrow up to $50,000 or 50% of your vested account balance. They've changed that, assuming you make the amendment, to you can borrow $100,000 or 100% of your vested account balance. Then as far as paying it back, upon the request of an eligible participant, the plan sponsor may suspend loan repayments due on any outstanding loans for up to 12 months. Now, this relief expires on 12/31/20. So a couple of scenarios here. First off, I already had a loan, so I can extend that. I don't have to make any payments on that this year. Or I take that 30,000 loan in lieu of taking the contributions. I don't have to make any repayments this year. So, you know, everybody can make choices, but at least you do have choices upon, you know, what to do as far as getting the money. Moving on, RMDs.
One question, Mark, on
Sure.
the loan that just came in, I just sent it over to you. In regard to the 401k, with the up to $100,000 loan, can that be taken? And then can that be rolled into an IRA without penalty for someone who still has their job in furlough?
Right, because you could say, look, and this would be a safety measure. You could say, look, I wanted to get the money in case things got in dire straits, but I didn't need it. So I just rolled it back into the IRA so I didn't have a taxable event. You good? Okay. RMDs. Okay, so here's the people that don't have to take RMDs this year, and I just want to be thorough, so I'm going to read this to you. Participants who turned 70 and a half prior to 2019 will not be required to receive an RMD for 2020. Number one. Number two, participants who turned 70 and a half in 2019 and who did not receive their first RMD for 2019 on or before 1/1/20 will not have to receive their first RMD for 2019 or 2020. Okay, you get a double whammy there. Third scenario, beneficiaries receiving life expectancy payments will not be required to receive their 2020 beneficiary RMD. Good. And the last, beneficiaries who have an account balance in the plan subject to the 5-year distribution rule may extend that to 6 years. Okay. Now, I'm a TPA that administers qualified plans. I do not administer IRAs because you don't need a TPA, but the question has come up consistently in other webinars I've done about, do these RMD requirements apply to IRAs in addition to the Ks? And the answer is yes.
Okay, Mark, great job. Student loan repayments, we'll just fly through this. Those benefits can be delayed now for student loan repayments. But also, interestingly enough, you can, if you have employees with student loans, you can make up to $5,250. You can apply towards their student loans, and it's not taxable to them, but deductible by you. So that's a pretty interesting piece of this. If anybody has anyone with student loans or is thinking about making a loan. Group health plans. Basic here, if you're in the group health business, you probably already know about this already, but it covers COVID testing. Actually, I don't think they're even charging for COVID testing anymore. So I'm not sure about the big value there. And must cover qualifying coronavirus preventive services. So that's a couple of things on that. These are resources for you. Again, these are all hyperlinks. So I would invite our advisors on the call to get it into a letter out to your clients, so then they can click and get more information about these things. So Shane, that's it for us. We wanted to save some time for obviously for some questions, and we'll be happy to take those. On the question that involved the Roth conversion, the question dealt with if you have to be careful with what you're doing in 2020, because if you make a conversion in 2020, and we should talk about conversions now, because now you got to balance this stuff. But let's say your income, your joint income, you and your spouse was $100,000, and you go make a $100,000 conversion from your IRA to a Roth IRA, which may make sense from a financial planning standpoint, which may make sense because accounts, at least until the last 2 days, were pretty low. When you do that, you have changed your AGI from 100 to 200, and you would lose the credit. So I think that was the question that was being asked.
Correct. All right, we've covered a lot of the questions so far. Is there any additional questions that you'd like to type in?
There was one that I saw pop up on the chat, and it dealt with, I applied for the, as Todd said, the SBA loan, the EIDL. You can apply for that and either the tax credit program or the PPP. So you get the SBA loan under EIDL, which was expanded across the country with the CARES Act, as opposed to just being in disaster areas. And you can get either of the tax credit program or the P+P. So that was a question that came up. If you applied for the PPP, then say P+P, I've got that on my mind, Shane. Then if you apply for the PPP, you cannot do the tax credit program. You can't do them both.
Very good. Any other questions? If you like, several of you are asking if you can get a copy of these slides. The answer is yes. Please send your email or request to us. The email address is support@gfainvestments.com. Again, support@gfainvestments.com. And just request a copy of the slides. And if you want the recorded program, we'll send you that link as well because it is being recorded. So you can listen to it again if you like.
Here's a question from Mr. Massey, Shane. On the 401k distribution, is the limit the greater or smaller of 100% of, or $100,000? In other words, can a person distribute $250 from the plan? I'll let you take that one.
No, it's we'd have to have over 100,000 for the question to be relevant. So assuming you do, you're limited to 100,000.
So while we have you, if you've already taken your R&D for 2019, can you give it back? And I think the answer to that is you can roll it back into an IRA.
Correct.
Yes. Correct. Yep.
One of the other questions that comes in is when the $350 billion, for example, for the PPP is gone, what is the backup plan, if any, there?
Yeah. So every day, I don't know about you, I'm a political junkie and a news junkie. So I'm listening to the Treasury Secretary twice a day, and he is reporting how much they have given out already. So you got a $350 billion cap right now. As of this morning, he reported $40 billion was taken. So that leaves $310 billion. We're talking about $350 billion. This stimulus package, 2.2 trillion, is half of the normal budget for the United States. And they're talking about, with these three packages, putting $6 trillion of stimulus into the economy. That's an aside. So to answer your question, is every day they're going to report that. And what the Treasury Secretary said this morning, when they get close to the end of this, if there's still a demand, then the White House is going to go back to Congress to ask for more money.
Very good. For people that have applied for the SBA business loan application or the $10,000 credit application, et cetera, about what time frame are we looking at for money to actually be distributed? Have we heard any updates on that?
I had, when this first came out, I'll let Todd talk about this as well. One of my partners told me one of his clients got it in 3 days. Like I said, we applied about 8 days ago or 9 days ago. Nothing as of yet. The other part of the question, I think, is to explain the difference between the $10,000 and the loan. My understanding is that anybody who applied under the EIDL, okay, the EIDL, the disaster loan provisions of the SBA, would be given a $10,000 advance that would be a grant. You would not have to pay it back. And then whatever whatever you qualified for above and beyond that would be a loan under favorable circumstances, but had to be used to keep your business in operation. You could not take that loan and then pay off another loan with it. So that would not be the purpose of the amounts above the $10,000. So Todd, you want to jump on any of that?
The only other thing I had heard, or at least originally, was that if you got into the EIDL program, that they were talking about a 2-week turnaround time initially. But I mean, you know, there's no guarantees on that when we're talking about, you know, a government administered plan. And this is all new for everybody.
Anything else, Shane?
Yeah, along that line, and correct me if I'm wrong, I also understand that if you apply, you get the $10,000 grant, like you said, that is an advance of the loan that you qualify for. If you decide you don't want to take all of the loan, if you want to take some but not all of the loan, you have that option as well. So you could technically say, I only want the 10,000, or maybe I qualify for 100 and I say I only want 50. Is that correct?
Yes.
Yes, that's my understanding too.
All right, well, we are coming up to the top of the hour. Again, I want to thank everyone for participating. We had nearly 100 people participate, so thank you so much. If you are here as a small business owner, client, or maybe someone who just saw social media and joined on with us and are not currently a client of any of our firms, we totally appreciate you being here. Please reach out to your financial advisors. Gateway has about 200 advisors across the country. We're more than happy to service you. If you are working with one of your financial advisors, please reach back to them. They will have copies of all of this information. They have access to a lot more detailed information behind the scenes that they can use with you one-on-one. And certainly if you don't have an advisor, or the advisor you're working with, you're not comfortable with, please reach out to us and we will certainly let you know. You've got some great resources here. On the Gateway website, I will give that out to you. It's gfainvestments.com. That is gfainvestments.com. We do have a section on our public website where both advisors and clients can go to find additional resources, information that is coming out about all of the things that we talked about today, from various banks, product sponsors, lenders, etc. Also on our website, you can find a local advisor, or again, if you're not currently working with one, that might be close to your geography. I will tell you that I don't know if it's factual or not, so I hesitate to say too much, but I have heard twice in the last 2 days that Wells Fargo has closed off the applications. They have, according to them, reached the limit that they are willing to take at their bank. Now, I don't know if that's local that I'm getting that information, or whether that's on a national level. I do know that US Bank is still taking them. I talked with them yesterday, Chase Bank, and of course, there's a lot of lending institutions. In fact, Todd or Mark or Keith, you might want to address the banks aren't the only place to go. I mean, that obviously should be the first choice if you have a good banking relationship. Small banks, community banks, regular national banks, but there are some lending institutions as well that are able to do this. My understanding.
If anybody needs any additional resources there, feel free just to shoot me an email. It's todd@lawealthplan.com. We've got some national relations as well with some different groups that may be of help.
Very good. All right. So again, Shane@gfainvestments.com. Certainly visit our website, gfainvestments.com. We'll be happy to get any resources that you like, connect you with any of the experts that have been on the panel today. And thank you again for participating. Ashley, we'll go ahead and close it up for now since we're at the top of the hour. Keith, thank you. Mark, thank you. Todd, thank you. I know you guys have another one backing up to this, so I appreciate it. Keith, one more comment.
One point, Shane, is why don't you get to all your attendees our contact information, particularly via email, and if we can answer questions directly, we will.
Absolutely. All the advisors will have all of your contact information. I appreciate that. I know you have another one backing up to this, so thank you again for your time, and have a great day, everyone. Please stay safe, stay healthy, and don't forget to wash your hands. Thank you.
Thank you.